There used to be a deal in America. You worked hard, you got a decent job, you bought a house, you raised a family, you retired comfortably. Maybe you didn't get rich, but you were stable, you were secure, you were middle class. That deal is gone. Right now in 2026, the middle class, the backbone of the American economy, the group every politician claims to fight for, the standard of living an entire generation was promised, is collapsing. Not shrinking, not struggling, collapsing. The share of Americans who qualify as middle income has fallen from 61% in 1971 to just 50% today. And the direction of that movement is not upward. In this video, we are going to show you exactly why that is happening, who is responsible, and what it means for you, whether you consider yourself middle class right now or not. Welcome to Broke by Design. Before we talk about why the middle class is collapsing, we need to define what it actually is, because the definition matters more than most people realize. The Pew Research Center defines middle class as households earning between 2/3 and double the median household income. In 2026, that means roughly $48,000 to $145,000 per year for a family of 3. That sounds like a wide range. And it is. But here's what that range actually buys you in 2026. At $48,000 a year, $4,000 a month before taxes, you cannot afford the median rent in any major American city without spending more than 30% of your income. You cannot qualify for a mortgage on a median-priced home. You cannot meaningfully save for retirement after covering basic living expenses. At $145,000 a year, you can afford a home in most markets. Barely. You can save modestly for retirement. But one medical emergency, one job loss, one unexpected expense can erase months of savings overnight. The middle class used to mean security, a buffer between you and financial disaster. Today, for most people in that income range, that buffer is razor thin or non-existent, and the numbers confirm it. In 1971, 61% of American adults lived in middle-income households. By 2023, that number had dropped to 50%. That is 11 percentage points, tens of millions of people who fell out of the middle class over 50 years. But here's the part that never makes the headlines. They didn't all move up. The upper income tier grew from 14% to 21%, but the lower income tier grew too, from 25% to 29%. The middle class thus isn't just shrinking because people are getting richer, it's shrinking because people are falling in both directions, and more are falling down than up. So why is this happening? Why has the most prosperous nation in human history spent 50 years slowly hollowing out the economic class that built it? 4 forces, working together, simultaneously. And none of them are accidents. Force 1, wages stopped keeping up with productivity. Here's a fact that should make every working American furious. Between 1979 and 2020, worker productivity in the United States, how much value each worker generates per hour, grew by 61%. In that same period, typical worker compensation grew by just 17.5%. That gap, 61% productivity growth versus 17.5% wage growth, represents decades of value that workers created and never received. Value that went somewhere else? To shareholders, to executives, to capital owners. In plain English, American workers have been getting more productive every single decade while their slice of what they produce has been getting smaller. The deal that built the middle class, work hard, get paid fairly, was quietly renegotiated without anyone asking you. Force 2, the cost of the essentials exploded. While wages stagnated, the cost of the 3 things the middle class needs most, housing, healthcare, and education, grew at rates that make inflation look tame. Since 1980, college tuition has increased by over 1,200%. Not 12%, not 120%, 1,200%. Healthcare costs have grown at roughly 3 times the rate of general inflation since 1970. The average American family now spends over $22,000 per year on healthcare, more than many families spend on housing. And housing, which we covered in detail in our last video, has seen median home prices increase by over 40% since 2020 alone. These are not luxury items. Education, healthcare, and housing are the 3 pillars of middle-class stability, and all 3 have been systematically priced out of reach for the people who need them most. Force 3, the jobs that built the middle class disappeared. The American middle class was built on manufacturing, stable, unionized, well-paying jobs that didn't require a college degree but paid enough to buy a house, raise a family, and retire comfortably. Between 1979 and 2019, the United States lost approximately 7.5 million manufacturing jobs. Some went to automation, some went overseas where labor was cheaper. All of them left communities that had no replacement for the economic foundation they provided. What replaced them? Service sector jobs, gig economy work, part-time positions with no benefits, no pensions, no union protections, jobs that pay less, offer less stability, and provide none of the upward mobility that manufacturing jobs once delivered. The ladder that the previous generation climbed into the middle class was pulled up, and the people at the bottom were told to climb anyway. Force 4, debt became the substitute for wages. Here is perhaps the most insidious part of the entire story. As wages stagnated and costs rose, the financial system offered a solution. Credit? Student loans to pay for the education your parents got for almost nothing. Mortgages that stretch 30 years to afford homes that cost 8 times your annual income. Credit cards to cover the gap between what you earn and what everything costs. Debt became the way ordinary Americans maintained the appearance of a middle-class lifestyle while the economic foundation of that lifestyle was being systematically dismantled beneath them. Total U.S. household debt hit $18 trillion in 2025. Student loan debt alone sits at $1.7 trillion. Credit card debt is at an all-time high of $1.17 trillion, with average interest rates above 20%. The middle class didn't just shrink, it was replaced with debt. So we know the middle class is shrinking. We know the 4 forces driving it. But let's talk about where the money actually went, because it went somewhere. Between 1970 and 2020, the share of aggregate income held by upper-income households grew from 29% to 50%. The middle-class share fell from 62% to 43%. The lower-income share stayed roughly flat. In other words, the middle class lost roughly 20 points of income share over 50 years, and almost all of it went to the top. The top 1% of American households now hold more wealth than the entire middle class combined. Let that sink in for a moment. 1% of households, more wealth than the 50% of households in the middle. And the gap is accelerating, not closing. During the pandemic years of 2020 to 2022, while middle-class Americans lost jobs, struggled with remote school, and watched their savings drain, U.S. billionaire wealth increased by $1.3 trillion. This is not the natural result of a free market working efficiently. This is the result of specific policy choices, tax structures that favor capital over labor, regulatory environments that protect market concentration, trade policies that prioritized corporate profits over worker wages, and financial systems that reward asset ownership over work. The middle class didn't accidentally disappear. The conditions for its disappearance were built, piece by piece, policy by policy, decade by decade. So what do you actually do with this information? First, understand that your financial struggles are not a personal failure. If you are working hard and still feeling like you're falling behind, you are not doing something wrong. You are experiencing the mathematical result of 50 years of policy decisions that were made without your input and without your interest in mind. That matters, not because it pays your bills, but because blaming yourself for a systemic problem stops you from making the right decisions to navigate it. Second, the middle-class playbook your parents followed no longer works. Go to college, get a stable job, buy a house, save in a pension. That sequence was built for an economy that no longer exists. Following it blindly in 2026 means taking on $50,000 to $200,000 in student debt for a degree that may not deliver the income premium it once did, buying a home at the worst affordability point in 40 years, and saving in instruments that barely keep pace with inflation. That doesn't mean education is worthless or homeownership is never right. It means you need to make these decisions with clear eyes about the actual current economics, not the assumptions of a previous generation. Third, the single most important financial move available to most middle-class people right now is owning assets, not just earning income. Owning things that generate returns while you sleep. The reason the wealthy keep getting wealthier while the middle class stagnates is not intelligence or harder work. It is asset ownership. Stocks, index funds, real estate bought at the right time and price, businesses, intellectual property. The K-shaped economy we talked about in our inflation video rewards ownership, not labor. You don't need to be wealthy to start owning assets. A low-cost S&P 500 index fund through any major brokerage can be opened with as little as $1. A consistent $200 per month invested from age 25 at historical average returns becomes over $500,000 by retirement. Not because of luck, because of time and compounding working in your favor instead of against you. Fourth, protect your income like it is your most valuable asset, because right now it is. That means building an emergency fund of 3 to 6 months of expenses before anything else. It means having skills that are difficult to automate or offshore. It means understanding your value in the labor market and negotiating accordingly. And it means not taking on debt for depreciating assets, cars, consumer goods, lifestyle inflation, that drain the resources you need to build the ownership position that actually creates long-term security. Here is what the collapse of the middle class actually is when you strip away all the political noise and economic jargon. It is the story of a promise that was made to an entire generation: work hard, play by the rules, and you will be secure, that was quietly withdrawn while everyone was busy working hard and playing by the rules. The wages that didn't keep up with productivity, not an accident. The education, healthcare, and housing costs that exploded beyond reach, not an accident. The manufacturing jobs that disappeared without replacement, not an accident. The debt that filled the gap, not an accident. Every one of these forces has beneficiaries, people and institutions who are wealthier because the middle class is poorer, and they have every incentive to make sure you keep blaming yourself instead of the system. That is what Broke by Design exists to change. One video at a time, one person at a time. If you watch this far, you already think differently than most people around you. Subscribe so you don't miss what comes next. And share this with someone who is working hard and wondering why it still feels like they're falling behind. Because now you know why. We'll see you next week.